Okay, dear students, today we are going to start one MTQ, that is OT case of ACCA Study Hub of F6 employment income. Okay, so without wasting time, let's read it. So the name of the question is Edward taxable income for the tax year 24-25 is 171670. So taxable income means this is after deducting personal allowance. Okay, so personal allowance has already been deducted. Okay, now he's trying to calculate his balancing payment or repayment for the tax year. Don't know issue. Information for the tax year 24-25 includes the following, which have all been see the words, which have all been taken into account in calculating taxable income. So whatever we are just going to read, has already been taken into account, of this taxable income, already included in the taxable income. Okay, so now what we are studying is these are separate requirements, right? Okay, now Edward is employed by Stately as a marketing director. So basically this person Edward is doing a job. Edward is doing a job. Now, Stately Limited provided Edward with a home entertainment system. Listen, employer provided employee to asset for usage. See, personal use. So now my question is this home entertainment system is a car? No. So that means this topic is assets other than car for private use. Hope you remember the usage benefit of 20%. Right? The home, and see, this is the date on which employer first provided this asset to employee. Now they are saying the home entertainment system had been purchased by Stately Limited on 6th April 2021 for £5,200. Now this is the amount on which employer bought it. The company gave the home entertainment system to Edward on 6th April 2024. 6th April 2024 means the first day of our fiscal year. With no charge, means free. Means the consideration is zero, although its market value at that time is 2200. Okay, so we need to calculate the gift benefit. For 24-25. So before wasting a single minute, let's do it. Okay, see this requirement, see this point only. Let's back it up. What benefit for the home entertainment system will be included in calculating Edward's taxable income for the 24-25? Okay, so wait, this is 6th April 21, then you have 6th April 22, then you have 6th April 23, then you have this fiscal year 6th April 24. Okay, and this is our fiscal year, students. This is the next one is our fiscal year. Now the original cost was 5200. Now initially employer on 6th April 21, employer gave asset to employee just for the usage. So this fiscal year, and this fiscal year, these 3 fiscal year, employee just used it and took the benefit. So we need to calculate usage benefit, and we all know the usage benefit is 20% per annum. So 5200 multiplied by 20% is 1040. I think 1040 here, then 1040 here, and then 1040 here. Now at this date, this is the date which is 6th April 24. On this date, the market value of this system is 2200. But employer sold for 0. employer sold it for 0, right? Okay, employer sold it for 0. So now my dear student, we need to calculate the gift benefit for this fiscal year 24-25. We need to calculate gift benefit for 24-25. Okay, and I hope you remember the lecture, you have taken the lecture. So whenever you need to calculate gift benefit, first you need to do this working: market value less consideration, which is 2200. Okay, so the first working is 2200. Now this is the second alternate working, which is original cost, which is 5200 less taxable usage benefit to date. Now this fiscal year is, wait, okay, cost less taxable usage benefit to date. Now you need to calculate, the these, you need to deduct these three usage benefit, which is 21 22, 22 23, and 24 25. 3, sorry, and 23 24. Wait. Okay, so 21 22, 22 23, 23 24. Now let's deduct it. It's 1040, again 1040, again 1040. If you remember my lecture, now this you will get a NBV. It's a sort of NBV. So 5200 less 1040 less 1040, this will give you 2080. Okay, now what is the consideration? Now compare this with the consideration, and in this question the consideration is 0. So through this working the answer is 2080, and now you will connect these two and you will write higher of. So tell me which one is the higher amount. Which one is the higher amount? The higher amount is 2200. The higher amount is 2200. Okay, so my dear student, your gift benefit for 24-25 fiscal year, your gift benefit for 24-25 fiscal year is 2200. Okay, so this is one question you have done. Please take your time and check it out. So answer is this A, 2200. Now next part, this part, see, Edward is employee contributed 4% of his gross director remuneration of 179,000 into stately limited occupational pension scheme. Yes, employee contribution in occupational pension scheme of employee contribution in occupational pension scheme of employee is allowed expense, is always an allowed expense. It's always an allowed expense. Okay, so this will be deducted from employment income, 179,000 into 4%. Now they are saying the employer contributed further 6% on his behalf. So whatever employer contributes, it's an exempt benefit, so it will not come anywhere, exempt benefit. Okay, but 4% is allowable deduction. Now one more thing, Edward the employee, whatever goes out from the employee pocket, it's a deduction. Okay, Edward donated £200 gross per month. See, there are 12 months in a year, to charity under the payroll deduction scheme. So yes, payroll deduction schemes contributions are allowed expense, So this 200 multiplied by 12, 2400 is allowed expense. 200 multiplied by 12, 2400 is allowed expense. Now just see these two and let's solve one MCQ. Okay, see, what is the total amount of deduction? See, deduction for pension contributions and charitable donations, which will be allowed, okay, in the taxable. So 179,000 multiply by 4%, this is the first thing which is allowed. 7160, and one more thing was also allowed, that is 200 per month. 200 multiplied by 12 is 2400. So can you add these two? Okay, so 9560 is the answer for question number 2. 9560 is the answer for question number 2. Then number 3, this one. Hope you remember the mileage allowance. Listen, let me recall you. If employee is using his private car for the business of employer, then employer, first of all, employer will pay something. So whatever employer will pay, it's called amount received. Amount received is full-time taxable, amount received, okay? But as the employee is using his private car for the business of employer, so the car will be depreciated, there will be some running cost, fuel cost and other cost. So now these actual costs are not allowed. These actual costs are not allowed. Only mileage allowance, only mileage allowance is allowed instead of this. Only mileage allowance is allowed instead of this, okay? So let's start. Edward used his seat, same the story. Edward used his private car for the business purposes. He drove 12,000 miles in the performance. See, in the performance. So these are business miles for Stately Limited, for which the company paid an allowance of 35 pence per mile. Now, very simple. First of all, two things we need to calculate. Amount received, the first thing is called amount received, which is simple. Amount received is equal to 12,000 multiplied by 0.35. Amount received is equal to 12,000 multiplied by 0.35. Very simple. 0.35, 4,200. Now this is full-time taxable, and the second thing is called less mileage allowance. Mileage allowance, okay? So mileage allowance is fixed. Mileage allowance are fixed rate, you know. For first 10,000 miles, it's 45 pence per mile, and the excess miles is 25 pence per mile. So I think we have 12,000 miles. So out of 12,000, first 10,000 will go like this, 4,500, and then 2,000 miles will be working like this, 500. Okay, so 4,500 plus 500 is 5,000. Now go very simple. 4,200 is the full-time taxable amount which will be added, and this 5,000 will be deducted. So the net amount is 800 negative. 800 negative. This 800 negative will go in the employment income P&L as an allowed expense. As the examiner is asking the net answer, so I have calculated the net answer, okay? But sometime when I do detailed question, I add 4,200 on the upper side and then 500 to be deducted in the allowed expense side, okay? So automatically the net impact comes. See, what mileage allowance will be deducted? This is 800. Okay, 800. Okay, so now the next requirement is, what is the balancing payment or repayment? So we need to calculate the tax now finally. So what is the taxable income? In the first line it was written, the taxable income was 171,670. Let's start. And this is pure employment income. He is only doing job, okay? So pure employment income means pure non-saving income, 171,670. Let's do it. Now, taxable income means this is the income on which we'll directly apply the tax rate. Now, let's see the band. So, 0 to 37,700. First band, and the second band is 125,140. So, the capacity of first band is 37,700. Okay. And the second band is right 87,440, right? Okay, now first we'll pick 17160 and we'll knock the first band, so definitely complete capacity will be consumed. So this will be like 37,700 multiplied by 20%. Okay, so it's 7540, right? Then you have, out of this 171,670, we have calculated tax on 37,700. So how much is left? 171,670 minus 37,700. It's 133,970. Okay. Now you'll pick this 133,970 and you'll knock this second band. So definitely the capacity of second band is again lower than this amount. So complete second band will be used and the tax rate is 40%. Okay. Now out of this 133,970, 87,440, we have calculated more tax. 46530. Now definitely this 46530, both bands are consumed now. So 46530 will come in the last band, and that is 45%. 20938. Okay, so your final ITL will be 63454. Okay, now this is your income tax liability. This is your income tax liability, right? There is one more point, which is pay. Can you see this pay? Can you see this pay? Pay deducted is 61600. So hope you remember, the pay means deduction at source. Deduction at source, and this pay 61,600 will be deducted from income tax liability. This income tax liability means this year's actual total bill. And from this bill you have already paid some amount, that is pay 61,600, right? $1,854. This is your balancing payment, which is called income tax payable, or you call it balancing payment as well. Income tax payable is 1854.5. 1854.5. Okay, let me check the answer. Yes, this is the D answer. Okay, 1854.5 is 1855. 1855. Now the last point. Assuming, this is just true and false. Assuming Edward has no other sources of income, identify whether each of the following statements are correct or incorrect. No other sources of income means only employment income. Only employment income in this question, as this part is related to this question. So means no other income means only employment income. Okay, That means no business income. Now, if Edward completes a paper tax return, paper-based hard copy, paper-based tax return by 31st October 2025, then HM Revenue and Customer will prepare a self. Yes, correct, perfect. Let me remind you. See, this is your 24-25 fiscal year. This is your 24-25 fiscal year, which starts on 6th April 24 and ends on 5th April 25. Okay. So after the end of the fiscal year, if you submit your document before 31st October, after the end of the fiscal year, if you submit your documents before 31st October, that is 31st October 25, then you know the rules. The officers of tax department or the team of tax department will calculate your tax. Okay, so this is true. Now, Edward's tax returns must be retained until 31st. So sorry, it's incorrect. Why? Because if a person has no business income, like the case of this question, that means only employment income, no business income, then he or she must retain the tax records by 31st January 2027 for this fiscal year 24-25. Listen, let me explain you in basic manner. See, 24-25 fiscal year ends on 5th April 25. Just see which one is the next 31st January. The next 31st January is 31st January 2026, and from this date 12 months more. So it's going to be 31st January 27. I repeat. If a person has no business income, then he must retain the records 12 months from the end of the fiscal year following 31st January. Okay, that means fiscal year end is 5th April 25, and then the next 31st January is 31st January 2026, and from this date 12 months. Okay, so this is the due date. In simple terms, for fiscal year 24-25, you need to maintain the records of tax by 31st January 2027 if you don't have business income. Okay, like this case. So the last answer is false, incorrect. Okay, I hope you got it. So please work hard and make your teachers proud. And if you want to share this class, you can share with your friends as well. Thank you. Take care.